A major XRP announcement just dropped, and if you don't act now, you could be missing out on a massive opportunity. Recent reports and insider discussions suggest that 2,534 XRP is a key amount for upcoming financial shifts, and those who secure their holdings early may be in the best position to benefit. XRP has been gaining traction in global finance, with Ripple's technology being adopted by major banks and institutions. But now, something even bigger is happening. There are growing indications that a specific amount of XRP 2,534 tokens may be linked to new financial systems, institutional requirements, or liquidity pools that are preparing for mass adoption. This isn't just speculation, there are real signs that something major is unfolding behind the scenes. With financial institutions looking to integrate blockchain solutions into their operations, XRP is emerging as a leading asset for fast and cost-effective cross-border transactions. If regulatory clarity improves and adoption accelerates, those who have already positioned themselves with XRP holdings may be at a serious advantage. But what exactly is this major announcement, and why is 2,534 XRP being talked about as a crucial amount? In the next section, we'll break down the details of this development and explain what it could mean for XRP's future and its investors. The latest XRP announcement has caught the attention of investors and institutions worldwide, and for good reason. Reports suggest that XRP is being positioned for a major role in the future of digital finance, with 2,534 XRP emerging as a critical figure in upcoming financial systems. But what does this really mean? Ripple has been working behind the scenes with over 300 banks and financial institutions, building a network designed to replace outdated banking systems with faster, blockchain-powered transactions. With ongoing discussions about central bank digital currencies, CBDCs, and cross-border payment solutions, XRP is gaining momentum as a key asset that could power the next generation of global finance. Several financial analysts and insiders believe that institutions accumulating XRP in specific amounts could be preparing for new liquidity pools, regulatory frameworks, or even requirements for participation in the growing blockchain financial system. The 2,534 XRP figure may be linked to certain financial thresholds, minimum holdings for liquidity providers, or even an early indicator of mass institutional accumulation. This isn't the first time we've seen institutions quietly prepare for a shift before the public catches on. Similar patterns were seen in the early adoption of Bitcoin by corporations and ETFs, and now XRP appears to be following a similar path. If XRP is truly being set up as a backbone for international financial transactions, those who position themselves early could be in for massive gains. So why exactly 2,534 XRP? Is this a minimum institutional requirement, a key liquidity level, or something even bigger? In the next section, we'll break down the deeper meaning behind this number and how it could impact XRP's future valuation. Why exactly is 2,534 XRP being highlighted as a crucial number? Is it a coincidence, or does it have a deeper meaning tied to institutional adoption? Let's break it down. Some analysts believe that 2,534 XRP represents a key threshold for liquidity providers, institutional participants, or even future financial system requirements. Ripple's ongoing partnerships with banks and payment processors suggest that XRP could be integrated into a structured financial network where certain holdings are required for participation. This could mean that institutions and high-net-worth individuals are preparing to hold a minimum allocation of XRP for future settlement systems, market-making activities, or even a new financial framework under development. Another theory is that 2,534 XRP could be linked to liquidity pools designed to support large-scale financial transactions. In decentralized finance, DeFi, and institutional trading, liquidity pools require a specific amount of assets to ensure smooth market operations. If XRP is being used as a bridge asset for cross-border payments, there may be a standardized amount necessary to participate in these transactions. 2,534 XRP could be part of this structured liquidity system. Additionally, with central bank digital currencies, CBDCs, being developed worldwide, some speculate that certain financial institutions may need to hold a fixed amount of XRP to access Ripple's on-demand liquidity, ODL, system. ODL eliminates the need for pre-funded accounts by allowing real-time settlements through XRP. If banks and institutions are setting aside 2,534 XRP as part of their liquidity strategy, it could signal a major shift in how global payments are conducted. While we can't say for certain why this number is significant, the repeated references to it across financial discussions, institutional reports, and XRP accumulation trends suggest that it's more than just a random figure. If this pattern holds true, then having 2,534 XRP may not just be a strategic move, it could be a ticket to participating in the next phase of digital finance. But how could this affect XRP's price? If institutions are truly moving toward XRP adoption at scale, could we see a massive price surge in the near future? In the next section, we'll break down how this level of institutional involvement could impact XRP's valuation and what price predictions analysts are making. If institutions are truly moving toward large-scale XRP adoption, how could this impact its price? Could we be on the verge of a major breakout? Let's break down the potential price impact and what analysts are predicting. The biggest factor in XRP's price movement is institutional demand. Unlike retail investors, financial institutions don't trade based on hype. They invest in assets that serve a purpose in the global economy. If XRP becomes a key player in cross-border settlements, central bank digital currencies, CBDCs, and financial liquidity pools, the demand for XRP will skyrocket. Historically, whenever an asset gains institutional adoption, its value increases significantly. We've seen this with Bitcoin, which surged after institutional investors, hedge funds, and major corporations started accumulating it as part of their portfolios. If a similar wave of institutional investment happens with XRP, prices could rise dramatically as supply becomes more limited. Another important factor is regulatory clarity. One of the biggest barriers to XRP's explosive growth has been the ongoing legal battle with the SEC. However, with Ripple winning key victories and gaining more recognition worldwide, regulatory approval seems closer than ever. If XRP gets full clearance in major markets like the US and Europe, it will open the floodgates for banks, payment processors, and financial institutions to start using XRP on a massive scale. With institutional adoption on the rise and XRP's role in global finance becoming clearer, the question now is, can you position yourself before the market takes off? If XRP is truly set to become a major asset in cross-border transactions, CBDCs, and liquidity pools, then preparing early could be the key to maximizing potential gains. The first step is accumulation. If the theory behind 2,534 XRP being a key threshold holds true, then having at least this amount could be a strategic move. Whether this number is linked to institutional requirements, liquidity structures, or upcoming financial frameworks, accumulating now before a price surge could put you ahead of the curve. Second, secure your holdings. As institutional demand increases, there is always the risk of regulatory changes, exchange restrictions, or even sudden price volatility. Keeping your XRP in a secure hardware wallet rather than on exchanges ensures that you have full control over your assets, protecting them from potential external risks. Third, stay informed. The crypto landscape moves quickly, and developments around XRP are unfolding every day. Keeping up with Ripple's partnerships, regulatory updates, and institutional adoption